Right now, the sentiment, the macro, the on-chain metrics, the ETF flows, they're all pointing to the same thing. We're in one of the most brutally uncomfortable reset moments in crypto. These moments usually come right before the next big leg of a cycle. Now, I say that very carefully because the only way that you can navigate these markets without getting swept up in all of the emotion that goes along with it is to first acknowledge what you're feeling. So as we start this video, let's name it. It's uncomfortable, it's confusing, and it really might be just downright exhausting. And I know a lot of you are feeling that same exact way. But once we face those feelings up front, we can move on and we can make decisions that are based on the actual data and not those feelings, not emotion. Check out what Jesse Eckel on X says. I feel absolutely stupid posting at this point. I don't know why we keep going low. I read that and I'm like, exactly. That's exactly how I feel this part of the cycle as well, especially as a content creator. You can be as bullish as you want on the zoomed out charts, and you know I am. But when price keeps falling, it does start messing with your head a little bit. Even most people that have been here for years, they've been questioning the markets. But then Jesse flips it and he says, when you zoom out, the setup is unfathomably bullish. Why? Because we're going from a tightening cycle into an easing cycle. QT is ending. Rate cut odds are starting to flip. Policymakers are forced to flood the system with liquidity to deal with all the strain from a prolonged tightening cycle. Then Jesse said something I completely agree with. The fundamentals for crypto with legislation and institutional adoption have quite literally never been more bullish. So on one screen, you've got price crashing, and on the other, you've got a macro and infrastructure quietly lining up for the next expansion. That disconnect is very uncomfortable, but it is exactly what creates opportunity. Julian Battelle comes in from a different angle over here on X. Everyone's suddenly back to debating who to unfollow because this whole space has turned on itself yet again. So here's my take. I usually stop following accounts that pump out views when everything is going up and then disappear the moment things turn down, right when the community needs them most. He said, you have to learn to take the hits. That is the nature of markets. They humble everyone. And here's the part I really like. He says, what counts is having the courage to stand up and be bold when others are fearful. And I've genuinely been trying to do that with my content lately. Right now, almost nobody wants to take a view. A bullish argument is the last thing anyone wants to hear, which is exactly why it's worth paying attention. So emotionally, that's where we are. People feel stupid, exhausted, confused. And yet some of the more experienced voices are quietly saying, hey, this is exactly what it feels like near the important inflection points. Here's Hunter Horsley. Look at this poll. Hunter Horsley ran this poll asking, with prices going lower, what are you doing? Roughly 9% at the time of this recording said they're selling. Over 40% said they're buying. Around 37% said they're just holding. So despite how brutal this drawdown feels, most people following this space closely are either dollar cost averaging in or they're just sitting tight. They're not capitulating. And that tells you two things. Sentiment feels awful, but it feels awful because of all the noise. But in terms of behavior, there is still a lot of patience than the timeline actually suggests. And this sets us up for the next layer of all of this. Macro versus sentiment. Jeff Park summarized the whole environment in one line. The macro could not be any better for Bitcoin. The sentiment could not be any worse. When the environment is quietly improving and everyone feels absolutely terrible and exhausted, that's when the next major move is being seeded. Then you've got Pomp over here on X asking the really uncomfortable question, what if the Bitcoin bull market is not actually over? He's not saying we avoid volatility or we just completely skip all the pain involved in cycles. He's simply pointing out that once the market reaches total consensus on, okay, we're in the bear now, that's oftentimes when the opposite starts building under the surface. And you can basically tie that right back to Jesse's post. We're transitioning from a tightening regime to an easing regime, with QT ending, possible balance sheet expansion ahead, and crypto infrastructure more mature than it's ever been. Macro and structure are quietly lining up, while price and sentiment are screaming the exact opposite story. Now, this brings us to the actual data, the on-chain and indicator side of things. For a moment, let's talk about that phrase, the spring is coiling, because that's one of my favorite visuals when it comes to crypto. Micro to Macro points out that on Coinbase, there have only been 2 other times in Bitcoin's history when the weekly RSI was this low. The bottom of the 2019 bear market, maybe he meant 2018 bear market, and the bottom of the 2022 bear market. And he notes that even the pandemic crash didn't push RSI this deep. That's how oversold the move is. That's what the spring is coiling really means. Momentum has been smashed so hard to the downside that any shift in flows can trigger a crazy snapback. We've covered this before, but CoinBureau shared Glassnode data showing that realized losses on Bitcoin are now as big as they were during the FTX collapse. Recent buyers are panic selling into this move. He calls it a big reset. That word reset is important. You're seeing a lot of people being shaken out of the market. Short-term holders are very simply selling coins at a loss. And it's very unfortunate to say, but that's how you clean the slate for the next leg of a cycle. Swiss block shows their risk-off signal sitting just inches from the same capitulation zone that marked major BTC bottoms over the last 2 years. They say we're entering the final stretch of seller exhaustion, and that once it rolls over, Bitcoin typically snaps into a bottoming phase with sharp, fast rebounds. Bitcoin Vector echoes that with their own read. 60 weeks after the last signal, we're back at a risk-off reading of 100. Every past extreme like this has lined up with seller exhaustion and a major bottom, supported by steady spot demand. Even if the absolute bottom isn't in yet, they say a technical relief is getting close. So you've got record level realized losses, one of the deepest weekly RSI prints in Bitcoin's history, and multiple independent risk-off models screaming seller exhaustion. That's what a reset looks like in the data. And this lines up so well with what I'm seeing inside our Crypto Capital Venture Intelligence system. Right now, the CCV Intelligence altcoin market cap long-term risk score is sitting at a 13. Historically, at this risk level of a 13, the price was higher 85% of the time after 3 months and 100% of the time after 1 year. This doesn't mean we bounce instantly. Nothing in crypto works like that. It doesn't work like a switch you just turn on and off. But it does mean we're sitting inside one of those deep reset zones where long-term capital historically accumulates while sentiment is at its absolute worst. And that's what our intelligence system does. It just helps visualize that and contextualize that with risk scores. It pulls in the price, on-chain data, volume, and all these other components into one number. This allows our members to sell when risk is high and buy when risk is low. And the number right now is screaming the same story we've seen across RSI, realized losses, and risk-off signals. We're in the kind of territory where bottoms form, not parabolic tops. And it's not all just about Bitcoin. Think about altcoins right now. Hunter Horsley over on X shared flows into Solana ETF. Roughly $20 million went into BSOL in a single day, about $85 million of inflows over the week. And he reminds everyone, for every seller, there's a buyer. While retail and X is doom posting, ETF investors are quietly buying Solana on sale. That's not what the end of crypto looks like. That's what accumulation during fear looks like. And you can extend that out to the broader altcoin space. This is usually how it goes. Bitcoin gets smacked down. Panic starts spreading. On-chain data is screaming capitulation. And meanwhile, patient money with a multi-year view is adding exposure. They're not quitting. When the macro returns, guess what? Those positions are already in place. So let's zoom back out and connect all the dots here. You've got Jesse talking about one of the most bullish macro and adoption backdrops crypto has ever had while prices crashing. Julian reminding everyone that markets, they kind of give you a very new perspective, a different perspective. But courage and objectivity matter most when the market is oversold and nobody wants to hear a bullish case. Jeff Park hammering the mismatch between incredible macro and terrible sentiment. Pomp over there questioning whether the bull market is over narrative might be premature. On-chain metrics showing FTX level realized losses, historically low weekly RSI, and back-to-back risk-off extremes that historically line up with bottoms and powerful reversals. And ETF flows quietly buying Solana and probably other assets while social feeds scream capitulation. Now, individually, any of these could probably pretty easily be dismissed, but together they tell a very coherent story. We're in the middle of a reset, and you cannot ignore that all of this is happening right as we are days away from quantitative tightening coming to an end after years of business cycle contraction. Yes, this is absolutely a reset, a painful one, but a reset that is transferring coins from impatient hands to patient ones, from emotional sellers to data-driven buyers, all while the macro slowly shifts from tightening to easing in the background. Does that guarantee that the exact bottom is in? No. Could we still chop, fake out, even make more new lows? Absolutely. That is how markets work. But the point is this, by the time everyone starts feeling comfortable again, by the time the headlines are flipping bullish, by the time the narrative says, okay, uptrend confirmed, the best risk reward will already be behind us and that opportunity will be far gone. Right now is the part of the cycle where people unfollow, people rage quit, people overfit narratives to their own emotions. And it's also the part where long-term capital, the people looking out to 2026 and beyond, they are quietly positioning into all of the fear. So here's how I'm approaching this as someone who's lived through multiple cycles. I'm not pretending that this does not hurt. Drawdowns hurt. I'm not immune to that. You're not immune to that. No one is. But I keep coming back to the same frameworks. Zoom out to the macro. QT ending, liquidity setups, A shift from tightening to easing. Zoom out to structure, ETFs, regulation, infrastructure, institutional rails that didn't exist in 2018, 2019, 2020, 22. In fact, they hardly exist now. These rails are just being put into place. Zoom out to data. RSI extremes, realized losses, risk off models, ETF inflows. When those three line up, I'm talking macro, structure, and on-chain against horrible sentiment, I see a reason, at least for myself, to stay patient, refine my plan if I need to anywhere, and prepare for the next phase of the cycle. That could mean sticking to a DCA plan, respecting your risk management plan, having a clear exit and accumulation strategy in place, and just having a solid framework for the rest of this cycle, instead of flipping your entire thesis because of terrible price action and terrible sentiment. So if you're there, you're scratching your head, wondering, why do we keep going lower? Everybody's wondering that. Even though everything you're seeing macro-wise looks so bullish, you're not alone. But look at the data. Don't look at the feelings or emotion. Because whether this exact monthly candle is the bottom or not, all of the signs of a coil and a reset are right in front of us. So take a deep breath and focus on the plan. If you enjoyed this content or found it helpful in any way, please consider giving it a like. Hit the subscribe if you're not a subscriber. And if you're not in our intelligence system, right now we have a free trial going on. Our risk models are designed to remove the emotion from macro decisions. Accumulating when risk is low, selling when risk starts getting high. Get back there, try us out. You can start setting up your alerts. We've activated SMS text alerts. We now accept crypto, and we are just getting started. I really appreciate each and every one of you watching. I will see you in the next video. God bless.